All right, sorry for the inconvenience, but I realized that when I thought I saved this, it didn't save the column for conversion costs, so I need to go back for equivalent units. So what I'll do is kind of make this into part one and part two. Part two will be discussion or my examining this issue of multiple departments, and then take a look at the conceptual questions. All right. Now, again, the idea here is that they have the 160 units that they have to account for, which is made up of what they have in the beginning plus what was started, or actually not what started, but what got transferred in. Because they really don't initiate anything in this department, they take what they're given. They finished 120, and there are 40 units left in the ending inventory. So let's go back and look at this. Now, again, the issue here is not so much with the top part of the equation, but with weighted average, it doesn't matter how, when, and where something began. As long as I did something with it during this time period, it's included as part of the calculation. So even if I only add 1 more percent to finish it, it's treated as if it were here the whole time. So if I finished it, it gets included in terms of the equivalent units. So say they finished 120, then I'm going to add 120 for all 3 columns. And essentially, the difference is that with transferred in, that I add the additional column. And to a certain extent, that's really the major difference here. The ending work in process, what gets a little complicated often is with the when materials are added. Now, with respect to the transferred in, they come in complete. In other words, I can't do anything more to finish what's already been done in previous department or departments. So these are always going to be at 100% under weighted average. Materials, depending on when they're added during the process, in this case, are added at the very end. So as long as they're in work in process, they're not finished. They've added 75% of conversion, so it would be 30 equivalent units. Okay, here we go. This is a little bit better. Okay, the cost part of it, again, it doesn't matter. As long as the costs are there, they all of it gets included. So I bring down the 177,000, the 27,000, 86,000. As long as it's there, be it a cost or a unit, it gets included, divided by the equivalent units. Then I go back and just, okay, apply it to the 120 and to the 40. Okay. Now in this case, because the equivalent units are 0, there are 0 materials added during this time period. But in terms of total material cost, I can account for it. And in essence, that's really the only difference is the 2 tricky elements dealing with materials, what percent, at what point do I add materials, and with the equivalent of the transferred in cost. As I said, generally they're coming in at 100%, they're done. So they come in with all their cost, and then the costs that were added in previous departments. So divided by the units that I had that flowed through my department during this time period. All right. In terms of understanding process costing, think in terms of some industries where you would be using it. And I think sometimes that can help a little bit. As I said, the oil industry, the food industry is a good example of where this is done a lot. If you're taking grain and making breakfast cereal out of it, again, 1 pound of cornflakes is the same as another pound. So process costing would be perfect in that particular situation. Now, process costing tends to try to simplify things. As I say, you divide things into either materials or conversion, depending on when things are added. And the idea here is that materials tend to be added generally at the beginning or maybe at some other point. Conversion, on the other hand, tends to be done evenly throughout the production process. So because of that differentiation in terms of when things are done, you simplify and you say, okay, we'll have 1 column for materials, 1 for conversion. Conversion being the definition of both labor and overhead. Now, equivalent units, I don't want to make a huge issue out of that. But basically it measures the amount of work done during the time period. The difference being with weighted average, equivalent units equal whatever's there. It doesn't matter if they were in beginning inventory, if they were started and completed, they all get added. FIFO, on the other hand, will only include in terms of equivalent units only that work done during the time period. Weighted average, again, basically the issue is average. It throws everything back into the pot, both in terms of the items I'm producing in terms of equivalent units and cost. And it simply re-averages it. And the idea behind weighted average is that, well, it really shouldn't change from period to period. If it does, then probably I don't really have a problem with my calculations, but rather with, am I wasting time, wasting money in production? So weighted average just simply says we don't really care when it was started. If it's here during the time period, it gets included in terms of equivalent units and in terms of cost. FIFO, on the other hand, is looking at it in terms of only measuring in terms of equivalent units. Again, I don't ignore beginning inventory cost because, as I demonstrated earlier, that layer gets brought down. Okay, but the equivalent unit cost is only going to be calculated on the work done during the time period. So total costs are still going to have to be accounted for, but the differentiation is how I calculate equivalent unit cost. And under FIFO, just to kind of sum it up, I only include the work done during this time period. Perhaps if there is one advantage to FIFO, it might be that since I'm only calculating it based on the work done during this time period, any fluctuations in cost would have to be attributable to something that occurred during this time period. Aberrations, things like that, if I'm re-averaging, sometimes it may take me a little while to discover that I have a problem. So FIFO tends to be a little bit better in terms of detecting that, and also too, if I'm in a very competitive industry, I can take corrective action to minimize my cost. But number 11, the journal entries, basically the same thing. The only difference is I use the worksheet approach under process costing to determine that debit and credit entry I'm going to make, say moving it from Department A to Department B or from Department A into finished goods. That's the basic difference. So basically the journal entries are the same. The only difference is just the worksheet approach in determining the debit and credit entries to move something from work in process to finished goods. That's really the only difference. Standard cost, we're not going to worry about that right now with respect to process costing. We'll come back to that a little bit later and what we do with that.